back with you now on Wave Listens Live, our third segment today. Of course, it is Wednesday. That means it is Warren Wealth Wednesdays with Marcus Warren. He is here today, and not only are we talking a bit about what's important right now in the financial world, but we have some questions that were sent in by you, the viewers, and we'll get to have those answered today by an expert. So good to see you. Good to have you here.
Good to see you.
Let's talk about kind of your quick overview of your business if people haven't seen you in a while, and what's going on right now. You know, a little overview in the financial world. We're heading into the election, which I know is going to change things a bit.
Yeah, I mean, a little bit, maybe. Well, I mean, what do we do? We're a wealth management firm where we specialize in investment management, retirement planning, but more importantly, we're also tax focused. So we have enrolled agents, CPAs on staff who focus on taxes. A lot of times when you're working with a broker or an advisor, they generally don't deal with taxes, and CPAs generally don't deal with investments, but we have it all in-house where the left hand knows what the right hand's doing, and we find out that that's more beneficial for our clients, especially clients who are in retirement.
Yeah, well, if anyone who's joining us today wasn't here for your last segment, you did a whole piece on kind of easing those fears around the election and stress and things like that, so just one of the areas that you're able to help folks as we head throughout the remainder of this year, 2024. Do want to make sure I can get to these questions because we've got some good ones today. And let's start with David, who says, I've read a lot about Roth conversions as a tax planning strategy. Do you think this is a smart thing for every retiree? When is it most beneficial?
Well, David, so for the most part, he's asking, do you think that it's a smart thing to do for every retiree? Probably not. It really depends on your individual situation. But when can it be beneficial? And it's generally beneficial when you feel that tax rates are going to go up. And so right now, and basically, let me take a step back. So a Roth conversion is basically when you're taking money that's in your traditional IRA or your traditional 401k and you're converting it into a Roth, right? And Roth vehicles basically grow tax-free, and when you take that money out, it's tax-free. And so right now, for a lot of our families and clients that we work with, because tax rates are so low, a lot of times it has made sense to convert now, pay the tax at this lower tax rate, put it in this tax-free vehicle via the Roth conversions, and then when tax rates change and when tax rates go up in the future, because we got a lot of debt deficits, unfunded liabilities, you find yourself already pay the tax at the lower rate, and you don't have to worry about if taxes go up in the future. So it can work, and it has worked for a lot of the clients that we work with.
Okay, good stuff. Good advice to keep in mind. Let's go to Kim now, who says, I'm retiring at the end of November. Congrats, Kim. I'm 65 years old and plan to start taking Social Security. Will I have to pay taxes or be penalized because I worked this year?
Generally speaking, when you start to take Social Security, and if you're still working, it really depends. If you're not at full retirement age, and full retirement age differs for most, 66 and 10 months, 66 and 8 months, 67, whatever that is. If you take Social Security before full retirement age and you are still working, and you make over, I think the limit right now is a little over $21,000, then you can find yourself having to pay some sort of penalty. You basically have to pay $1 penalty for every $2 you make over that threshold. So that's number one, if you have to pay a penalty or not. But once you're full retirement age and you're still working and you're collecting Social Security, that no longer applies. Now, as far as taxes go, you're never going to get away from taxes.
I knew
right?
that was going.
And so depending on how much you make, depending on how much your Social Security is, the government's always going to want their piece. And a lot of people don't know this, but your Social Security benefits can be taxable. And depending on if you're married, if you're single, and your provisional income, you can pay upwards or your Social Security can be up to 85% of your Social Security can be taxed. So you have to watch out for those things. That's one of the reasons why we do both retirement planning and tax planning in our office.
Yeah, great question. Okay, let's go to Dana now, who asks, I inherited an IRA from my mom who passed away in 2023. She was 85 years old. Do I have to take an RMD from this every year?
The answer is yes. And an RMD is what's called a required minimum distribution. So
Okay.
when you have a traditional IRA or 401k, once you reach a certain age, generally that age right now is 73, the government makes you take money out because they want you to pay taxes on that money that hasn't been taxed yet. And so if you inherit an IRA and your parent who has already been taking RMDs, they pass away and you inherit that IRA, you have to continue to take those required minimum distributions and continue to pay the tax on it. And you have to, now since there was the Secure Act that was passed back in 2020, when that went through, you have to spend down that inherited IRA within 10 years. So you have a 10-year time frame to spend down that inherited IRA and then, of course, pay the tax.
Yeah, this is why you need an expert on your side as you go through.
That's
okay,
right.
Let's get to Tim's question. Tim writes, next year I plan to cash my IRA to help my brother buy a business. Do I have to pay estimated tax immediately, or do I have until the end of the year to do that?
So, Tim, yes, you will have to pay your estimated tax. Immediately, not so much. You have to pay, we have a pay-as-you-go system, right? So most people who are paid via W-2 is taken out each and every paycheck. When you're pulling money out of a retirement account, then generally you have to, or if you're retired, you have to pay quarterly taxes, right? And so if, say, he cashes out his IRA for his brother's business, which I don't know if that's the best thing to do, depending on the business. We'll see how that goes, Tim.
Throwing that piece of advice in there.
Right. So if he cashes it out in January, he'll have to pay taxes that first quarter by April 15th of that year. So you have to do it quarterly.
Okay.
Yeah.
All right. We've got one more question here.
Okay.
Probably have to make this one a little quicker, but Linda is writing that she's nervous about the upcoming election. This kind of ties back to our last segment together.
Yep.
Should I move my investments to cash and wait and see what happens?
That's, I get this question a lot, especially every 4 years. Hey, what should we do? Should we take our money out and wait? The answer is, generally speaking, it doesn't matter what administration is in office over the long term, depending on the market. The market always moves up and to the right, so it's always moving up. Now it's up and down, but for the most part, I wouldn't put it in cash, because if you're putting it in cash, you're going to lose money because inflation is going to crush that cash, and you can never time the market. So just make sure you have a balanced portfolio, you monitor it quarterly or annually, and you'll be fine, regardless of who's in office.
Great advice. As you said, it moves the way it's going to move.
Yep,
okay, last thing we want to get in, less than a minute left. Best way for our viewers to get in touch with you if they need help on any of the services we talked about here today.
Yeah, they can go to warrenwealth.net, which is at the bottom of the screen, or you can give our office a call. And if you have a question that you want to be answered, you can go to Ask Marcus. And then, of course, we're having a webinar October 29th in regards to the election, doing a retirement election stress test webinar. Sign up on warrenwealth.net. A lot of good information there. I highly recommend it.
Yeah, that's highly recommended. And, of course, subscribe to the Marcus Warren Show podcast as well.
That's right.
Good to have you on.
Appreciate it. Thank you.
See you next time, next Wednesday. Good to have all of you here as well. I'll see you back here tomorrow.